the moment, our market is giving into gravity. It's got Trump challenges, it's got bank levy and S&P downgrade dramas. And only today, Goldman Sachs argues that we've seen the peak in bond yields in the USA. So how do we play the market right now? Jack Lowenstein is the joint CIO and MD of Morphic Asset Management. And Jack loves these kind of problems. He just swallows them up every day and invests accordingly. How are you, mate?
It's never boring.
It isn't boring, is it? Like I just picked up that gut.
Maybe boring, but
that chair's a bit
yeah, the market's going down more than I am.
Come good. That Goldman Sachs curveball today, you know, saying that they think that the yields have hit their highest point. I want to start on that one. Do you agree?
I don't really agree on that one.
Good either way.
I think that's unlikely. I think that we may not see yields go up as fast as people were expecting, but I don't think we've seen they've reached their.
Have you seen companies like Goldman Sachs over the years make some big calls, and you kind of think, is this going to help their book or not? I'm not saying that they have, but I've thought with other investment companies.
Well, the most famous one was the $150 oil price.
Correct, from Goldman Sachs.
I think 2007, if I remember rightly. And,
or 2008. I was laying on the beach in Sifnos in Greece when I heard that. I thought, this looks like a big call.
But they called gold up at that point. And of course it was you know, peak oil. And now, and just to speak my book as an ethical investor, but you know, we're talking about peak oil demand. So Goldman's got that one completely wrong.
Yeah. As individuals making big calls, and I guess it's the media in many ways that plays them up, but still, it's put out there and it does have market implications.
Absolutely.
Let's talk, we'll finish up in Australia, because Morphic Asset Management is a global investor, right? So if we Aussies want to invest overseas, you're an option for us to consider. So Trump must be an important consideration for you. Is it for you, Jack, or is it for the people who invest in your fund?
Certainly, I think a lot of our investors are nervous. At the moment, we think the economics trump the politics, and the economics are broadly okay. We are, as it happens, below market weight in the US. We're more interested in other markets, particularly emerging markets. So it's.
Have you always been that way, or is
no?
That's
our current positioning. We've been there for a while, but that's where we are now.
Right.
But as far as the US is concerned, I think that the problem we've got is that, if I might say this, Peter, older people like you or I have seen a few of these things. I came of age during the Nixon era.
Gee, you're a lot older than me. But go on.
But I mean, I remember vividly. And probably because I was at university at the time, you know, what happened when Nixon resigned, and how awful the stock markets were. I mean, and I was looking at it the other day. Stock market fell 50% in US dollar terms and 80% in gold terms during that final year of the Nixon presidency. But I don't think we're going to see a similar issue if Trump is, in fact, if an impeachment process starts, because the problem in that era was there were huge economic problems in the US. The fact is the US is in pretty good shape and probably picking up.
And earnings is looking pretty good too.
Exactly, earnings are recovering. So I'm not saying there won't be jitters and it won't, but at the moment I don't think it's going to be terminal for the stock.
But Jack, given that, if for example, and look, given the Republicans' stranglehold on the US Congress. It seems to me it's highly unlikely unless some really damning evidence comes along whereby the Republicans just can't ignore it. Now, if that doesn't happen, what's the likelihood that we'll see some progress on tax reform? And if that's the case, any negativity around Trump could end up being a buying opportunity, couldn't it?
But I think the bad news about this is that probably Trump doesn't get much done. But that may be the good news. I mean, the fact is that, perhaps I'm just getting really old. But
mature.
Mature.
Much nicer word.
Exactly. But generally, I'm of the view more and more that the less governments do, the better. Yeah. And frankly, the stock market will probably thrive on nothing happening.
But the tax cuts, the infrastructure spending, the deregulation, they're all fairly important to the 12% spike. Not all of it. Obviously, economics and earnings are important, but it probably would create a bit of an unwind if we thought they were all off the agenda.
true, but I think some of the deregulatory objectives, this is not to have a go at a bomb, but generally when you have a crisis, you get an excess of regulation, and then it comes time to get a few of the barnacles off and let the growth start up again.
Yeah.
So some of that excess regulation, that can be unwound without too much difficulty. I think there's an appetite for that probably on both sides of the House. I think that the healthcare reforms will probably not happen. The market is kind of pricing out. If you look, we own a company called Hospital Corporation of America, HCA, and it stopped falling. It doesn't care about the politics anymore. It's more or less pricing in the failure of those changes.
And will its share price go up if those changes went through?
If the changes go through, the share price will go down. But if it's confirmed no changes go ahead, it'll probably do well because it's been a beneficiary of having more insured people in the US marketplace.
Okay. So you mentioned also you're investing in emerging economies. What's the thinking behind that?
Look, I think it's very much horses for courses. We like South Asia, so we've been long both India and Pakistan. You won't get many people here talking about Pakistan. Pakistan's probably been one of our best picks. I think that there's a huge demographic tailwind for those economies. They've got very young population, so coming into the workforce. Inflation is falling generally, and they benefit from that falling inflation because it means that interest rates can fall.
Good for purchasing power.
Yeah. In India, you've had a very reformist government. I mean, it's 3 years almost to the day since Narendra Modi became Prime Minister. And we're so disillusioned about politicians in the Western world. The truth is that Narendra Modi is looking like Paul Keating on steroids. He's really been very brave. He's taking the lead to do stuff. So this week, India has brought in a GST, which is an incredible reform.
At what rate?
It varies over for 4. It's quite complex. There's 4
like
different
a UK
rates.
VAT.
Yeah, well, it's not quite that bad, but it is very complex. But the point is, it means for the first time you're going to get significant interstate commerce. So it's imagine if Victoria, New South Wales, and Queensland all had different sales taxes, and you couldn't really sell stuff across the borders. That's how it's been in India.
And also, it's probably been good for the black economy as well, getting at least some income from the black economy.
There's been, the increase in the tax base in India has been phenomenal in the last few years, mainly because they, as you may know, about 6 months ago, they demonetized 70% by value of all the notes in currency. So all that black economy basically disappeared overnight. Well, not all of it, but it shrunk momentarily at least.
So give us your global outlook, with all this, because obviously we're going to benefit from at least 2 things. The US economy doing well and getting the Wall Street lead, but the global economy looks stronger. And we saw this week iron ore prices went up again, and it's good for BHP and Rio and whatever. What's your global outlook like, Jack?
Look, my global economic outlook is I think we're still on that long, grinding recovery. My global stock market outlook is probably a bit different. I think that to some extent the US has gotten a bit ahead of itself.
Yeah.
Emerging markets have probably got more attraction. But if I sit here as an Australian looking at the market, my first thought is, what's going to happen in Australia? Do I want to have my money at home or overseas? And frankly, I think what we saw this week with the downgrade of the local second-tier banks by S&P, calling the bell very loudly on property prices. I think that we're going to see more weakness in the Australian dollar. I think the local stock market, because it's so dominated by banks, they won't do so well, even without the added burden of the tax levy. And I think, the most interesting thing that I saw from an Australian perspective in the last few weeks has been what's happened in Canada, where property prices haven't started falling yet in Canada, yet already second-tier banks have started to fail, or looks like they're going to fail.
But they have a fairly protective banking system, a bit like us, don't they?
They have 6 major banks equivalent to our 4 minor banks.
Okay.
But they're 3 non-bank lenders to the housing market are not nearly as strong as our second-tier banks here. Yeah. And they've had some very dubious lending practices, and one of them is down 60 or 70% in the last 2 or 3 weeks.
Are you expecting a big sell-off of our banks?
I think it's unlikely they're going to go up, and I think they probably do fall. My concern is really about the housing market here. I mean, I don't know about you, Peter, but I couldn't afford to buy my own home. When I bought it nearly 20 years ago, that's a bad sign. Yeah.
It's a good sign for a mature person to be in that position.
Very
it
nice.
shows that you've got very good judgment, and if you've got good judgment, say 20 years ago, imagine how good the judgment is now.
No, it's nothing to do with me. It's all to do with my wife.
Yes, I'll sign up to that strategy. Now, all right, so let's talk about how long this bull market's got to go. Are you worried that there are external developments that could rock the global equity markets, or are you fairly comfortable that we can keep grinding higher?
I think we can keep grinding higher as long as the big issue is, will the Fed take away the punch bowl? That's the US Federal Reserve.
Yeah.
And there's been scarcely a bull market that's died other than because US Federal Reserve has raised rates probably faster than was required. The Fed probably will raise rates a couple of times, which is why I think the bond rates are going to go on going up.
Yeah.
But I don't think they're going to raise them in a way that's going to really unravel this market. Meanwhile, in Europe and Japan, we're going to have super low interest rates for a very long time. I think interest rates could fall in Australia. They won't go up.
So you're not thinking about ever using in the short term, sell everything?
Not at this point. I mean, the more famous phrase is "sell in May and go away," which is historically what US stockbrokers did. I don't feel we're there at the moment.
Yeah. All right, mate. Great to see you.
I was great to be back.
Jack Lowenstein.